Good morning, everyone. So welcome to today's class. Today we're going to continue with Learning Unit 5. We're going to go into more depth regarding what the journals look like, how do you actually complete them, what type of information, and then we're going to do an example out of your textbooks where they've already completed the journals and then they ask you specific questions. So the question was based on the example in Learning Unit 5, and we're going to then touch on the main areas where students tend to struggle. Okay, so let's have a look at what is the learning units again that we're going to cover today. So today we're going to look more at the recording of your data's journal, your data's allowance journal, your creditors journal, as well as your creditors allowance journal, and then your general journal. So you can see we're going to discuss 5 types of journals today, and those are all the journals that relate to your credit transactions, the first 4, and then the last one relates to the sundry transactions. Now we're going to start with your debtors and debtors allowance journal. Now, before I explain these journals, you can tell me, how would you define or explain what a debtor is to someone? You can just type your answer in the chat function. So just to repeat the question, how would you describe a debtor to your friend or to a colleague? Okay, so for the guys that joined a bit later, the question is, how would you define or describe a debtor to someone? What is a debtor? Okay, so Tumelo says a debtor is someone that buys from the business on credit and therefore owes the business money. That's correct. So remember, a debtor is your customer of the business. That is someone that bought goods or got services from your business, but they haven't actually physically paid for it yet. So they bought it on credit and they will pay you at a later stage. And for that reason, they owe the business money. Okay, under what category, when we look at the accounting equation, would we document a debtor's balance? So which of the 3 categories do debtors fall under? Okay, so remember the 3 categories we have is assets, owners, equity, liabilities. Debtors, where would you put it? Okay, so Daniel says under assets. That's correct. Can you tell me, is it a current or a non-current asset? Okay, so Daniel says it is a current asset, and that is correct because normally your debtors would repay you within a 12-month period, normally within 30 to 60 days, depending on your settlement terms. So for that reason, it is a current asset. Okay, so your debtors journal basically summarizes all your credit sales that has occurred during a specific month, and that is based on a duplicate credit invoice. Now, it's a duplicate credit invoice because we give the original to our customer. And it's very important to note that these journals only record the credit sales. Where do we record the cash sales again? Who can tell me, what journal do we record cash sales? Okay, so that's correct, Tomelo. So in the cash book receipts, we record any cash sales that we've made during a month, whereas the credit sales would be in our data's journal. Do we record any cash receipts from our debtors in the debtors journal? Yes or no? I'm just going to repeat that. Do we record any cash receipts from our debtors in our debtors journal? So Bernice says no, and that's correct. Like I said yesterday, we record any cash received from a debtor in our cash book receipts journal. Now, what does our debtors allowance summarize on the other hand? That basically summarizes any returns. So that's where I purchased goods from someone and it was either the incorrect good or the product was not of the best quality. So it was substandard. Or alternatively, I've requested a rebate. So that can be a rebate, either a trade discount or it can be a bulk discount. It might also be a discount or a rebate due to the fact that the product was of a lower quality and then I asked for a reduction in price. Okay, but very important to note, you can only record it in your debtors allowance journal if a previous transaction, so the previous credit sale, was recorded in your debtors journal. So that means I returned something that I previously purchased. Then I record it in the debtors allowance journal. Again, this is just an example of what a credit note would look like, and we recorded from an original credit note, these transactions. Now, what does the structure of a data journal actually look like? Okay, so you'll see it's very similar to what we've done with the cash one, but the columns have now changed. So the first few columns are exactly the same, which is the document number, the day, the details, and then the later columns have been adjusted. Now, because debtors is an asset, we increase it on the debit side. So you'll see the debtors column is being debited, and then all the other columns, with the exception of cost of sales, are being credited, and the cost of sales are credited because our sales amount will be, the cost of sales is debited and the sales would be credited. Okay. Now let's look at what you have to fill in on each of these journals. Now you say debtors journal of, and then you fill in the business name. You include the month that you're specifically looking at, as well as the year, then your journal number. Then you have your source document number. Now in your question, they will give you the source document number. They will tell you which date it is in that specific month. The details is your name of your customer. Then the folio number is your debtors account number that you have assigned in the question. Now, in your test and in your exam, they don't necessarily give you a debtors account number, so you just leave that column blank. Your debtors control is your main column, and that total at the end of the month we take to our general ledger. We don't take each and every individual transaction to it, only the total. But now remember that debtors control value includes VAT. Okay, so that amount is similar to the bank column we looked at yesterday, which is inclusive of VAT. Then our sales amount is all the credit sales, and that is excluding VAT. And then our sundry accounts is anything that doesn't fall under debtors or sales or output VAT would then be accounted for in your sundry accounts. And your cost of sales is the cost of the inventory sold. That would also be exclusive of VAT. And remember, that is based on your markup percentage based on the sales value. Okay, so that is what your debtors journal would look like. Now, your debtors allowance journal, I've highlighted in red what is the main difference with your debtors journal. So the only changes is instead of debiting debtors control, we're going to credit that now, and then we're going to debit your input VAT, your sales return, your sundry accounts, and we're going to credit your cost of sales because we're returning it. So we're doing exactly the opposite than what we did in our debtors journal. Now, In the data's journal, we took it to output VAT. When I return goods, I take it to input VAT. So I claim the VAT back from SARS. And instead of sales, I take it to the sales returns account. Okay. And then when we get to learning unit 1, the sales and the sales return, when we're closing off our accounts, we will net those two off to work out our gross profit at the end of the day. Now let's look at what's different here. So it's all exactly the same. You do the business name, the month, the journal number, the source document, your transaction date, the customer name, data's account. So you see all the information is exactly the same as with the other data's journal. So it's exactly the same. It's just the names that differed and the direction of your accounting. Now let's look at an example to just make this a bit more practical. So you are the bookkeeper of ABC Stores. The business is a registered VAT vendor and trades only with registered VAT vendors. So I said that's important to know because that shows you can claim the input VAT. And we charge 15% VAT on all its sales. Okay, now because we're busy with data's control or the data's journal and data's accounting journal, we know we are charging 15% on all our sales. All the amounts are inclusive of VAT unless VAT is not applicable. And as the bookkeeper, you have been provided with the source documents for the month of March 2020, necessary for the preparation of the journal specified below. Okay, so they tell you we're busy with March 2020. We use the perpetual inventory system. And to remind you, that is where we record inventory firstly to our asset account, your inventory account, and then when we sell it, we take it from trading inventory and then we only put it to cost of sales. So that is where we do the 4 entries with the sales specifically. And then our markup is 100% on the cost price. So if my markup is 100% on cost price, what is my sales price percentage? You can just type it in the chat function. So if I marked it up 100% on cost, what would be the equivalent sales percentage? Okay, so Bernice thinks it's 100. Okay, so remember cost price. If it's on cost price is 100. Now I've added 100 profit on top of it. So what should the sales price be? Yes, Jamila. So if the cost price is 100, profit is 100, then our sales price would be 200%. Okay, so we add 100 to the original 100 to get to the 200%. Okay, now let's look at what type of transactions have they given us. So there's 3 transactions that we're going to look at. The first transaction says, C. Tatum, we had a credit sale of trading inventory. The markup on the trading inventory was 35% on the selling price. So this one actually had a different markup. So this was negotiated. So 35% on selling price. What is the selling price percentage? Okay, so let me repeat that. If the markup is 35% on selling price, what is the selling price percentage? Okay, so you'll see the first one's markup is different. It is 35% on the selling price. So what is the selling price percentage based on the information provided? Okay, so Bernice thinks it's 135. Okay, so Bernice, this is where and it's good that you wrote that amount because I know a lot of students would have done a similar amount. Okay, so remember, you need to read carefully whether it's on the selling price or whether it's on cost. If it's on the selling price, it means the selling price is 100%, which means our cost would be the 100 less the 35, which would give us 65. Whereas if I wrote it was on cost, then it would be 135, exactly like Denise said. So just be careful when you read it. We sometimes give you one item that is different to the rest to see if you know the difference. Okay, so this is a very good example where one little word can actually change your answer. Okay, then the second one, we've got Zook Traders. We made a credit sale of trading inventory of 38,760 less 15% trade discount. Okay, now with this one, when we do trade discount, we need to, when we work out the debtors amount, we have to take that trade discount into account. But remember the markup, let me just go to the previous slide. The markups is before any trade discounts are given. So we work out the markup before we even do the trade discount. Otherwise, you're not going to get to the correct cost of sales value. Okay, and then the last one is trading inventory is sold on 12th March. That was sold on the 12th of March was returned. So a portion of that was returned. So I want you guys just to take a screenshot of this slide so that when I move on to the next one, you have the information available in front of you. I'm just going to give you a few seconds just to take a photo of what you currently see on the screen before I move on so that you just have the information in front of you. Okay, can you just put a thumbs up if you're ready for me to go? If you've taken a photo or you have the information in front of you, so I can just see who's fine. Okay, so it seems that you guys have taken a photo. Okay, great. Okay, so now let's look at the information. How do we actually calculate it? So the first one in the data's column, we have the amount that was given to us, the 150,480. Now to calculate the output VAT, I told you the data's control amount is inclusive of VAT. So you see the output VAT is that 150,480. We multiply it with 15, divided by 115 to get to the 19,628 Rand. Now the sales amount is exactly the difference between the two. Okay, now we said the cost of sales. So let me just go back to the transaction. The first transaction, we said the markup is on trading inventory was 35% on the selling price. Okay, so there wasn't any trade discount. So you'll see I said the cost price is 65. How I got that is I took the 100, which is the sales value, I less the 35% to get to 65. You take the sales value, so that's the amount excluding VAT. You multiply it with your markup percentage, which is 65, is the cost that I want to work out over the sales amount to get to 85,053 Rand. Okay, so that's how you work out the cost of sales for the first transaction. Then for Zook Traders, let's quickly go back. So Zook Traders, we had a credit sale of 38,760 and there was a trade discount. Now, we take the 38,760, the trade discount, we take the 100% we would have paid less 15% gives us 85% is what we physically owe our debtor. And that is the 32,000 Rand 946. Now, based on that, we work out the output VAT, which is 15 over 115, and then the sales is the difference between the two. But where you had to be very careful because of the fact that they said we do the markup before our trade discount. You'll see here the cost of sales column, we take the original amount before trade discount. Okay, then we do our markup. So we said we want to work out the cost, which is 100, but our sales percentage is 200. But now remember that 38,000 was including VAT. And we said this cost of sales column needs to be exclusive of VAT. And that is why I multiply with 100 over 115 to work the amount that is exclusive of VAT to get that value. And this calculation here would normally count between 2 to 3 marks in a test or in an exam because of the fact that you had to see the markup percentage is on cost and you had to eliminate the VAT from the original value. Okay, so before I move on to the third transaction, are you guys okay with how to get to the cost of sales amount? You can give me a smiley face, a thumbs up. If you're happy, if you're not happy, you can give me a crying face or a sad face so that I can re-explain it. I just want to gauge where you guys are at with that explanation. Okay, so Bernice says she's fine. What about the rest of you? Okay, Tibby and Cameron is also fine. Okay, Pamela asked me to re-explain it. Okay, so Pamela, let's re-explain it quickly and the rest of you can listen as well. Okay, so in this question, let me just go back to the original information. You see that last sentence where it says trading inventory is marked up 100% on cost price before any trade discounts. That is the information you had to see to get this calculation correctly. Okay, now our trade discount was 15,000. Now how we work out the cost of sales? We said the markup is based on the cost before we even considered a trade discount. Now that means I take the 38,760 based on this information here. So that is the amount our debtor would have owed if we gave him no trade discount. Then we work out the cost based on 100% on the cost price, which is our markup. So that is why I multiplied with 100 over 200 to work out the cost amount of that 38,000. But remember I said that 38,000 that's in the debtors column is an amount inclusive of VAT. And we need to show amount exclusive of VAT in your cost of sales column. So that means that last bit, the multiply with 100 over 115, is where I remove the VAT out of that amount to get to a VAT exclusive amount for the cost of sales. So this is the only exception where you will never take the sales amount to get to your cost of sales value. Otherwise, you will get the incorrect value. Okay, so Pamela, are you fine with that explanation? Okay, great. Okay, so this is just to help you out how we got to the amounts, just for your information when you do the calculations later on again. Okay, so then the last transaction, we said we returned goods of 1,938 Rand based on the 12th. Okay, so now we have to reverse the input VAT, reverse the sales return. Now, those amounts are very similar. But now the cost of sales column, remember that 1,938 Rand is the amount we owe after trade discount was taken into account. So to work out the cost of sales, we have to then reverse the trade discount from that amount. That is why we multiplied with 100 over 85. Then we multiplied with the markup percentage, which is the 100 over 200. And then we take out the VAT. So the return had one little extra step, which is adjusting it for the trade discount we have provided to get to the correct sale. Okay, so we convert that price before the discount. So this is the main catch in this specific item. Do you guys have any questions on this cost of sale calculation? Are you guys okay with the explanation for how we got to the cost of sales for the return? Okay, you can just indicate how you're feeling about the explanation in the chat function with the emoji of your choice. Okay, so Benice asking, she's off topic, but she's asking ISOS 2 is only due for the end of April, right? Okay, so Benice, I want you guys to do the ISOS as soon as possible, but I will not close it before the end of April to give those guys that have started late in the semester an opportunity to complete it as well. So technically, yes, you have till the end of April. I just sent out a reminder this morning to those guys that have not attempted it yet, just to remind you, you still have to do it. Because remember, that counts towards your semester mark. So I don't want you to lose out on an opportunity to get a mark. Okay. Yes, so I understand you guys will need a lot of practice. I know these concepts are a bit foreign, it's new, it's understandable. So the more you do it and the more you work through the questions, you will get the hang of it. And that's why we try and explain some of the difficult concepts in class, just so that you can ask me questions, because I know it's not that nice sitting at home and you're like, ma'am, I do not know what's going on and there's no one to ask. And it's a lot easier to ask in class versus sending an email and trying to get the words, what do I actually want to ask? Okay, but remember, practice, 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 and then you will get the hang of this. The nice thing of the journals, there's a specific format or specific structure that you have to follow. And once you learn that structure and you learn the little tricks that there could be in a specific column, specifically with your cost of sales and your sales amounts, then once you get the hang of that, you will actually do really well in these journals. Okay, so just hang in there, you will get to it. You just need to practice a bit more. Okay, so this is also just to remind you that the original amount was inclusive of VAT and we need to exclude it. Okay, so now let's move on to creditors, and creditors a lounge journal.